Hello students, my dear. A very good morning, good afternoon, good evening. जब भी जो भी जैसे भी lecture देखेंगे. How are you all? Okay, चलिए. In the last lecture we have discussed about the main fundamentals of accounting. There are three golden principles which we have studied. First was debit. What comes in? Let us write it down again. Debit. What comes in? Credit. What goes out? Now this rule is for what type of accounts? This rule is applicable for all the real accounts. This rule is applicable for real accounts. That is the rule number one. Then we have debit the receiver who has taken money from us. Okay. And credit the giver. This rule is called personal rule account. Now we have third and the last rule, that is debit the expenses and losses, credit the gains and income. This is called nominal account. So these are the three types of your accounting rules. And I have told you one secret rule also that should be just up to you, not for the exams. Okay. Whenever you feel good, do a debit. Whenever you feel bad, do a credit. So if asset is coming in, if you are getting the cash, so I will do the cash account as debit. But if I have to pay that cash back in future to Mr. X, so Mr. X account would be credited. Okay. In that case, Mr. X is the giver, so it would be credit the giver. Okay. So these were the three fundamental rules, three golden rules of accounts. Whenever anybody asks you, you have to answer it like that. Okay, moving on. I asked you also to do some questions. For example, let's do the illustration number 4 here. Ascertain the debit and the credit from the following particulars under the modern approach. What we have to do? We have to find the which account would be debited, which account be credited from the modern approach. There are two approaches as we told. That is the your US and UK. I would say that modern approach as well as your another one. Let's do this question first. First transaction is given here that started business with capital. Whenever you will bring in capital, it may be in the form of cash, it may be in the form of any other asset. But let's assume if it is in the form of cash, so there would be increase in cash and increase in capital. Two transaction would be affected. Cash would come in, that will be a debit cash account, and a credit will be a capital account. So that was the very simplest one when the cash is introduced into the business. Let's talk about the second thing. Bought goods for cash. Whenever goods is mentioned, we use the purchases account for purchasing it and sales account for selling it. In this case, the goods are being purchased. So when the goods will come in, the purchases account would be debited. Now, if I have purchased for cash, so cash would go out. Cash would go out, so cash account would be credited. Okay, this account will be here. Okay, that was the second transaction. Let's do the third one. Sold goods for cash. So when the goods are being sold, cash will come in and goods will go out. So if goods are going out, we will use the sales account. So sales account would be credited and the cash account would be debited. I hope everything is clear. If there are any doubts, please let me know. Okay. And those who have missed the last lecture, you have to see the last one because that is the basis for all the upcoming lectures. Okay. Don't miss that. Paid salary. So if you have paid the salary, nothing is given. We will assume that it is paid in cash, not from the bank. Okay, so salary is an expense. When we do the expense, we feel good. That is salary account debit. And when cash will go out, we will feel bad. That is credit. Okay, salary is the expenses. So debit all the expenses and losses and debit what goes out. So cash is going out. So this is being credited. Okay, then we have received interest on investment. Now, without seeing down, just everyone try to solve this one. What should be the journal entry for received interest on investment? What shall be the journal entry? Which account will be debited? Which account will be credited? Try everyone. So if you have received interest, so cash will come in. Cash will come in. So what it should be done? Debit or credit? Very good. The cash account would be debited. Cash account would be debited. And then if interest is your income because you have received it, so all the income and gains should be credited. So interest received account, interest earned account, whatever you can call it. So here they have done cash account debit and interest account credit. Very good. Now try this one. Bought goods on credit from Mr. Y. Bought goods on credit from Mr. Y. Try this, everyone. I'm waiting for the answers and then we will move ahead. Come on, everyone. Try this one. Bought goods on credit from Mr. Y. We will not move ahead until and unless you get this point. Wow, that's great. One answer I've already received. 2, 3, 4. Wow, so much. Go on, everyone. So correctly said that it would be when goods are purchased. So we will debit the purchase account because goods are coming in. Purchase account debit to Mr. Y's account because in future I have to pay Mr. Y. That's great. Okay. For the E point, let's read it again. Received interest on investment. When you receive the interest, for example, I have made an FD in a bank. Okay. So let's say FD is of 10,000 rupees and the interest rate applicable is 6%. 6% per annum. For in 1 year, I will receive the interest of 6%. So if I do 6% of 10,000, that would be 600 rupees. So after 1 year, I have received this interest from bank. So whenever I will receive the interest, my cash will go up. Cash account will be debited. It would be 600 rupees. Two, that would be your income account. That is interest income account 600 because interest are being credited. I hope that point is clear now. For the F1, yes, Mr. Y account will be credited and purchase account will be debited. This will be the correct answer. See, it has been mentioned that purchase account debited and Mr. Y account credited. Moving ahead, paid rent out of the personal cash. Now, what to do with this one? Try everyone. We have paid the rent out of the personal cash, not the business cash. That is the personal cash. Try this. This is the very good one. So basically the rent is being paid. If rent is being paid, your expenses are being incurred. Whenever the expense is incurred, we will debit the expenses. So one thing is clear, the rent account will be debited. This is very, very clear. Now, which account should be credited? Which account should be credited? That is the main question over here. Come on, everyone. So basically, whatever the business owner brings in, okay, whatever the business owner brings in, that would be termed as capital. That would be termed as capital. So here, rent account debited to capital account. That will be capital account because it is the personal cash which he has brought in. Okay, we had the business cash, but we have not used the business cash. The proprietor has paid out of his personal cash from whom he has paid the rent. So obviously the expenses of business. So if it has been paid, that would be capital. Because if I have paid anything out of the business, so I will take it back from the business. And that is the capital. If I am the owner, so that will be introduced as the capital. So it would be rent account debited and capital account credit. That is the reason of it. Okay. So that was the best one out of all. We have done almost eight examples over here. Now let's look at another approach. As I told you, there are two approaches, the American approach and the British approach. I would say the US approach, the American is US approach and UK approach. So do we have an Indian approach also? Kya? Yes, we have the Indian approach also, which is called Indian accounting standards. Okay, this point of time, it has nothing to do with you. But yes, just for your general knowledge, I am telling you, there are Indian accounting standards also, which has been prescribed by the Institute of Chartered Accountants of India, which is applicable to all the Indian companies. Okay, let's talk about the American approach. What does the American approach says? We have already learned the British approach that the debit what comes in, credit what goes out, debit the receiver, credit the giver, and debit the expenses and loss and credit the gains and income. But here they says now divide every debit and credit into the types of account. For example, there is any capital. So if there is increase in capital, we should credit it. So if capital increases, that would be a credit. If there is decrease in capital, it will be debited. So let's do it in another way. First mention the type capital. So when the capital will be debited and when it will be credited, that we need to learn from this. I think everybody knows the answers already, but let's do this. These are the types of accounts. We have debit, we have credit. So what do you mean by capital? Capital is the owner's fund. Owner's fund is the liability to the business. If I get the liability, I am in burden, I will not feel bad. So if the capital is increasing, it will be credited. When the capital will be increasing, it will be credited. Obviously, just remember the first example. When we have started the business with cash rupees 10,000. So what entry we do generally? It would be cash comes in, that is cash account debited with 10,000 and two capital account, owner's capital account, that would be capital account. Okay, so here the capital is increasing and what it is done, it is being credited. So that is the reason whenever the capital increases, we credit the capital, and whenever the capital decreases, we will what? We will debit the capital. I hope this point is clear to everyone. So this is nothing but what we have already learned into a different way. Whatever way you like, you can use that. Okay. So we have done the capital. Let's go to any other liability, because capital and liability are of the same nature. You have to pay him back. Capital needs to be paid to the owner. Liability needs to be paid to other people's. Okay, it may be your creditor, it may be your lenders, anyone. So if the liability increases, we won't feel good. That will be credited. If the liability decreases, we will be happy. So we will debit it. Okay. Now we have another account, asset account, expense account, and revenue account. Let's do first the asset account. What is an asset? For example, cash, land and building. These are all our assets. If it increases, it is good for the business. So we will debit that. If the asset increases, it will be debited. If the asset will decrease, we will credit it. Okay. Then we have the expense, I think. Yes, we have the expense account. So if we incur any of the expenses, we will feel good. We will feel good. So if any expense is being incurred, we will have benefits. We will have the fun of doing that expenditure. So if expenses are increased, it will be debited. If expenses are decreased, it will be credited. Lastly, we have the revenue account. Revenue is just your sales. So for earning the revenue, we need to do a lot of efforts. Higher the revenue, higher is the efforts, higher is the time taken. So if the revenue is increasing, there would be a lot of pain involved, which will be credited if revenue increases, and if revenue decreases, it will be debited. Okay, so this is the simple chart which I have given you out of the American approach. This is what? This is the American approach. Okay. There is one doubt that if personal means we can use drawings only. If you have introduced something into the business, that would be termed as capital. If you have taken out from the business, so that time it will be called as drawings. Okay. Okay. Any doubt, anyone? Or shall I move ahead? And doubt? Okay. Moving on. Now we have a different type of example where it is mentioned that we have to ascertain the debit and credit under British approach or the double entry system from the previous illustration which we have just learned. Okay, what was the previous illustration? We have seen already this one. Okay, now let's take it out downside so that you will have a good view. Okay, so we have these transactions over here. Let's understand that. First transaction here says started business with capital. Started business with capital. So we did cash account debit to capital account. That is very, very simple. Now we have to tell them that which account it is. That is, cash is a real account. Okay, so cash is coming in, so we have done the debit. That is the thought process behind it. So if cash is coming in, real account, it is coming in, then debit. Now what is the capital? Capital is also what? When the cash is coming in, so capital is also increasing because capital is being what? Credited. And who has given this capital? It is given by the owner. So credit the giver. So we have the personal account over here, X capital account, Y capital account, whoever is the owner. So it is the giver. Okay, so I think we have all the uh, examples over here. For example, in the second, bought goods for cash. So goods are coming in. So purchases account is being debited. It is the nominal account because the purchase is an expense. Because whatever you are purchasing the goods, it is not an asset. I have told you already, it is not an asset, it is an expense for the business. And if it is an expense for business, so we have the nominal account, debit the expenses and credit the gains and income. So we have purchased the goods for cash, it will be cash account will be going out. That is the real account goes out and it will be credited. Okay. But if we have purchased any asset, then it will be a real account. Okay, so if you're purchasing or selling goods, so that would be your nominal account because that is your income or expense. Okay, I think all are quite easy. Let's do the last one over here. Rest you can manage. If you have any doubts, we can discuss it. So we have paid rent out of personal cash. The rent is being paid. The rent are the expenses. So again, the nominal account, according to the nominal account, whenever the expenses are being incurred, so that account will be debited. And that is out of the personal cash. So we need to pay that to the owner. So that again, personal account, credit the giver. That is how it has been done. Now we have already discussed about the accounting equation, which is called the assets is equals to liabilities plus owner's equity. Now I want you guys to try this illustration number 6. Prepare an accounting equation. Accounting equation means what? On one side, you have to write the assets that should be equal to your liabilities plus capital. Your liabilities plus capital. So you have to prepare an accounting equation from the following transaction in the books of Mr. X for January 2020. So what they have started? They have started with the capital of rupees 20,000. So your asset cash will increase by 20,000 and capital will be increasing by 20,000. So this is the accounting equation after transaction number 1. Then we have to do the rest of the transaction as well. Come on, everyone. You will have, let's say, 10 minutes. You have 10 minutes. Do it fast. Okay, guys, almost the time is up. Let's do it now together. Those who have done it, very good. But those who haven't done it or have any doubt, let's discuss it now and do it. So we have an accounting equation where we have two sides, the asset side, the liabilities and the capital. For every transaction, we will have two effects. Okay. First, we have already discussed whenever the cash is being introduced, so cash will increase by 20,000 and capital will increase by 20,000. So if you see what they have done, this is the format they have prepared. You don't need to learn the format because obviously these are the MCQs question. So they have mentioned the date. What is the transaction? On one side, they have mentioned the assets and another the liabilities plus capital. So on the basis of the first transaction of 1st of January, they have invested a capital of rupees 20,000. So asset has been increased by 20,000 and capital has been increased by 20,000. That's it. Now we have the second question, second part. That is the purchase goods on credit from Das and Company. So we have not paid them. So we have bought them on credit. That will increase the liability by 2000 and my assets will also increase by 2000. So that was your second transaction. That is 22,000 plus 2000 plus 20,000. This is your revised equation after transaction number 2. Let's go to the third transaction. Bought plant for cash rupees 8,000. So plant is an asset which will increase, but cash will go out. That is also an asset. So that will be decreased. Plus 8,000 minus 8,000. So revised equation would be 22,000 is equals to again 2,000 plus 20,000. No effect. Why it is no effect? Because the asset plant is increased by 10,000 and the asset cash has been reduced by 10,000, sorry, 8,000. So plus 8,000 and minus 8,000 leave us with again 22,000 in the assets. If I ask you, this 22,000 consists of what things? So we had the cash earlier of 20,000. Okay. Then in the second transaction, we have got 2,000 rupees of goods that I will say the stock which I have. And then we have a plant of 8,000. For which we have paid the cash. So cash will reduced by 8,000. So we have now left with 12,000 rupees of cash, 2,000 of stock and 8,000 of plant. So that is the description of that is the bifurcation of the whole 22,000 if you want to know, but they haven't asked for it, so that's fine. Now let's go to the next one. We have purchased goods for cash rupees 4,000. So again, your goods 4,000 will increase, cash 4,000 will decrease, the equation will remain same. Let's go to the next one. Sold goods for cash. The cost was 4,000, the profit was 2,000 and it has been sold for 6,000. Now there is some change. This is a very good example. See, you have sold the goods for cash. What was the cost of that goods? I had 4,000 rupees. That is the cost. So my stock will reduce by rupees 4,000. My stock will reduce by 4,000 rupees because the cost was only 4,000. Now I have received the cash of 6,000. So my cash will increase by 6,000 rupees. Okay. Now where will my profit go? Rupees 2,000 rupees profit. Whose profit is this? Sir, this is the business profit. And whose business it is? It is the owner's business. So this will go into the capital. This will go into the capital because whatever is earned by the business, it is of the proprietor. So it will be added to capital. So we have now three effects of this transaction, that your stock will go down by 6,000, sorry, 4,000. The cash will reduce by cash will increase by sorry, let's do it again. 4,000 your stock will go down, 6,000 cash will increase and your capital will increase by 2,000. That will be the wholesome effect to your. So 6,000 your cash is increased, 4,000 your stock is decreased, and 2,000 the profit has been capitalized. The capital profit has been added to capital. Okay. So total would be 24,000 plus 2,000 plus 22,000. Great. Okay. Going on. Paid to Das and Company rupees 1,000. So Das was our creditor. Okay, here it is mentioned we have purchased goods from Das and Company rupees 2,000, but now we have paid only 1,000 to Mr. Das. So by that, my cash will reduce by 1,000 and my liability will also go down by 1,000. So the revised equation would be 23,000 is equals to 1,000 plus 22,000. Then we have received from B Banerjee rupees 300. Now, who is this B Banerjee? Nowhere it is mentioned that we have sold goods to B Banerjee. There is nothing mentioned for B Banerjee. Now, we can say that we have taken a loan from B Banerjee. We have received some amount. So they have just mentioned received from B Banerjee rupees 300. So if anything amount is received 300, so it will be added. Now what they have done? They have reduced it minus 300. So I would say in this question, the information is incomplete. The information is incomplete. Why information is incomplete over here? Because they have not given that whether the stock has been sold, whether there is a debtor who was of 300, it has from whom the cash has been received. But what they have understood, so there was Mr. B Banerjee was our customer who has taken the goods on credit from us. Okay, they have taken the goods on credit. Now they have paid us back. So if he has to pay us back, there would be an asset in the name of B Banerjee. Okay. 1 second, guys. Let me just plug in the charger. 1 minute. Yes, guys. So what we have done here. So B Banerjee, they have assumed that he was a debtor from whom we have to receive some money. So we had the asset in the name of B Banerjee of 300. So now if he have paid us the cash, so our cash will increase by 300 and the asset who needs to pay, he has already paid me. So there is zero amount left from B Banerjee. So there is lack of information, but we can assume that Mr. B Banerjee was our debtor or a customer who has paid us back the 300. So what they have done, they have plus 300 and minus 300. Plus 300 is for the cash, minus 300 is for the amount due, which was earlier. Now he has paid that, so it has been nullified. So that is for this transaction. Then we have paid salary of 6,000. So if we have paid the salary, that is the expenses which we have incurred. Now, what will be the expenses have impact? If we have paid the expenses, 6,000 will be minus and it will be reduced from capital. So why we are reducing the salary from the capital? It has only one reason. We have added the profit to the capital. So obviously every expenses will also be adjusted from the capital. Okay, we are preparing a separate profit and loss account for all the expenses and incomes, from which whatever is the net profit or net loss, that should be added to the capital ideally. But here we are doing step by step process. So all the expenses and all the incomes will be added to your capital. Because earlier, if you remember, this was the plus 2000 we have done already for the profit which we got in selling the goods. Okay, so expenses will also be adjusted from capital. So if there is 6,000 rupees of expenses, so our capital will get reduced by 6,000. Okay, moving on. Then we have received interest of 5,000. So that is an income which is received. Cash account will be plus 5,000 and capital will be increased by 5,000 because it is an income. Last, we have paid the wages of rupees 3,000. So obviously minus 3,000 in your cash and minus 3,000 in your capital. So the revised equation and the last equation would be 19,000 equals to 1,000 plus 18,000. That should be your final answer. Is it clear, everyone? I have given you 10 minutes to solve this. Then we have taken 10 minutes to discuss this. Now I think everything should be clear on your part. Okay, moving on. So now we have two different bases of accounting. That is the accrual basis and the cash basis. What is accrual basis? Accrual base we have already discussed that whenever any amount is due, we will record it into the books of accounts, not when the cash is received. So that basis is called the accrual basis. And another basis is called whenever we will receive or pay the cash, only then we will pass the journal entries, we will pass the accounting entry. That is called the cash basis of accounting. Let's take an example and then it will be clear. Okay. For example, we have paid rent for 3 years. I paid the rent for 3 years, rupees 30,000. Now anybody can tell me what is the rent per year? If 30,000 is for 3 years, so rent per annum would be equal to obviously rupees 10,000. So if I have paid for 3 years, and what years we have paid, let's say there are 3 financial years. Currently we are working in 2023-24. That starts with 1st of April 23 and ends with 31st of March 24. That is your first year. Then we have 2024-25. And then we have 2025-26. Okay. So for all these 3 years, we have a rent of 10,000 rupees each. For every year, there is a rent of 10,000. But what I have done, I have paid it today. Now, if I am calculating the profit and loss for year 2023-24, do you think what amount should be expensed off as rent? What amount should be expensed off as rent? The full amount which has been paid, that is 30,000, or just 10,000 rupees? What according to you should be done? Tell me fast. If I am calculating the profit and loss for the year 23-24, what amount should be considered as an expense? The full amount which is paid 30,000 in the current year itself. So expensed of amount in year 23-24, how much should be that? 24-25, how much should be that? And lastly, 25 and 26, what amount should be there? So if you are following a cash basis of accounting, so whenever the cash has been paid, that will be the point of expense of. So if I pay 30,000, so it will be fully considered over 23, 24, and the rest year rent would be 0. But do you think it is an ideal practice? The answer is no, because I have paid this 30,000 for 3 years, not just for 1 year. Okay, these 2 years, the amount of rent I have prepaid it. It was not due, but we have prepaid it. So obviously, this should not be considered when we are following the cash basis. 30,000 should be expensed off immediately. But if we are following the accrual basis of accounting, so whenever that amount is becoming due, then only it should be expensed off or considered as an income. So in this case, if I follow the accrual basis of accounting, so in 2023, 24, 24, 25, 25 and 26. So every year there will be expense of rent of rupees 10,000 only, whether or not the cash has been paid in that particular year or not. So that is not with respect to cash. That is on the basis when the expense is actually incurred, or I would say it is due. So that is the accrual basis. Whenever it is being incurred, at that point of time, we need to consider that expense, not when we have paid it. So this is the cash basis of accounting, where we expense of all the things on the basis of whatever is being paid. But in other basis, the accrual basis, we do not consider the cash element. We just consider the whenever the amount is actually incurred or it is due. Am I clear, everyone? Okay. So it is mentioned the same here. Accrual basis of accounting is a method of recording transactions by which revenue, assets, liabilities, cost are reflected in the accounts for the period in which they accrue, they are incurred, they are due. Okay. This basis includes consideration relating to deferrals, allocation, depreciation and amortization. This everything you will hear in the coming chapters. This basis is also referred as mercantile basis of accounting. This is the prevailing basis of accounting across the globe. Under the Companies Act 1956, all companies are required to maintain the books of accounts according to the accrual basis. So it is a mandatory for the companies. Every company should be registered under 1956, Companies Act 1956, and that act says that all the companies are required to maintain the books of accounts according to the accrual basis and not the cash basis. Why not the cash basis? Because it does not give a fair presentation. Why it does not give a fair presentation? Because in 1 year you will have so much of expense, that is 30,000, and in the rest of year the expense is 0. So does this mean we will have the building only in the first year and no building in the second year? That is not the case, because we have paid everything in advance. So building is in year 24, 25 also, and 25 and 26 also, but the rent has been already paid. So that does not give a fair presentation. That is the reason we follow the accrual basis. What is the cash basis? It is a method of recording transaction by which revenue, cost, assets and liabilities are reflected in the books of accounts for the period in which actual receipts or actual payments are made. So that is the difference between the two. You can have a look for the difference in this also. Okay, then we have some hybrid mix. Hybrid, that means mercantile, or you can say the accrual basis plus the cash basis. So now how this is done? Let's read it out. This is the combination of both cash as well as accrual basis. Incomes are recorded on cash basis, but expenses are recorded on accrual basis. Okay, so whenever there is an income, that will be recorded on what? Cash basis. But all the expenses are recorded on accrual basis. For example, now Mr. X has a piece of land which he has given on rent to Mr. Y. This piece of land has been given by Mr. X, who is the landlord, and he has given it to Mr. Y. Okay. Now, Mr. X has fixed the rent of the land as 15,000 rupees per annum. For the whole year, the rent is 15,000 rupees. Okay, sir. Now, what Mr. Y has done? Mr. Y has paid rupees 30,000 of rent. So basically, what Mr. Y has done, Mr. Y has paid the rent for 2 years. What year we are in? Let's say we are in the year of 2023 and 24. And Mr. Y has paid the rent for 2023, 24 and 2024, 25. Okay. We are doing the accounting for Mr. X. We are doing the accounting for Mr. X. Now let's see how the Mr. X will recognize this rent of 30,000 as per the accrual basis, as well as I would say the hybrid basis of accounting. Let's see how Mr. X will do that. So firstly, Mr. X has received this 30,000. So everybody knows cash account will be debited by 30,000. That is the first entry. Everybody knows this. There is no doubt in this point. Now let's do the other part. For the year 23-24, what should be the rent? It should be only 15,000. So if I am calculating the profit for the current year, so to rent income only 15,000 should be recognized. How much should be recognized? 15,000. This will go to my profit and loss account. This will go to my profit and loss account. Now what will happen for the balance 15,000? What will happen for the balance 15,000? Whether it is due right now, answer is no. It will be due in the next year. But have I received it in the current year? The answer is yes. That is the reason the cash has been debited by 30,000. So now if this has been paid already, so let us create a liability that is called deferred rent. And this will be shown as a liability in my balance sheet. Why it is a liability? Because somebody has paid me in advance for any expenses. So in future, he will not pay that. In future, that person will not pay that. Okay. So if in future I will not get that money, what I will do? I will adjust it from the liability. So for example, in 2023-24, this entry will be passed. But when I am in the next year, 2024-25, this liability, as Mr. Y has already paid me. So now we will reverse this transaction. We will do deferred rent account debited 15,000. And now I will record that income, the rental income, which will go to my P&L, that is 15,000. So now everybody see what has happened right now. In year 23-24, we have received the cash. So my cash has been increased by 30,000. For 23-24, the income should be 15,000. So according to this, the 15,000 income has been transferred. Then we have booked a liability for this year because this income was not for 23-24, but it was for 24-25. So in that income, in that year, we have reversed that liability and we have booked that income. So now in 23-24, we also have the rent income of 15,000. And in 24-25, we also have the rent income of 15,000. How much cash is received? Cash is received 30,000 in 23-24 itself. That is the accounting treatment. So now what we have done, we have not recognized the revenue. We have considered it on the accrual basis. So that is the hybrid or the mixed basis of accounting. This is nowhere used, but obviously there is a method, so you need to know it. So it is not a accounting system on its own. It is the combination of cash basis and the accrual basis of accounting. This is based on the concept of conservatism. What is conservatism? It says that whenever you have an income, don't consider that as an income until and unless the income has been incurred. Because obviously after 23-24, if Mr. Y says that I have used your land for 1 year, but now I don't have to. But now I don't have to use this land again for the next year. So I have although paid you 30,000 earlier, but now give me a refund of 15,000. So if you have already considered whole 30,000 as your income in 23-24, there will be a problem in 24-25 because Mr. Y is asking for the refund. So whenever income is not accrued, you should not book it. But if expenses are accrued, you should book it. Sir, why deferred rent on 24-25 is debited? Can you please explain again? Here in 24-25, there was a liability in the last year. Why it was a liability? Because it was not due, but that person has paid me that amount. So what we have done, we have done the credit the giver because he have given me that amount. So we have done the credit the giver. But now in 24-25, will Mr. Y will pay me again? Answer is no, because he has already given the cash in 23-24. So whatever I have created the liability earlier, that liability will be debited here. Deferred rent account will be debited here and it will be transferred to the income account. We have not considered the whole income in your previous year 23-24. That is why it has been deferred and then recognized over 24 and 25. Is it clear, everyone? This is one more accounting concept which is called matching cost concept. What does the matching cost concept says? If you are in the year 23-24, so all the expenses for 23-24 should be mentioned with corresponding to the income of 23-24 so that you have a clear picture of your profit and loss. So you have a clear picture of profit and loss. Okay. So for example, if I have mentioned my major expense, we have taken the two examples. In the first example, I have taken the 30,000 rent, that is 10,000 rupees per month per annum interest was there, and we have paid the interest for 3 years. So we have paid 30,000 for the 3 years. So if I book whole 30,000 as an expense in first year against the income of 23-24, so my profit and loss will not give me a better picture. Let's do it by an example. You will understand that better. Rent paid. I am changing the figures now. For 5 years, rupees 1,25,000. Rupees 1,25,000. What were those years? For simplicity, I am taking the calendar year only. 2023, 2024, 2025, 2026, and 2027. For all these 5 years, there was an rent of rupees 25,000 per annum. What I have done, I have paid full 1,25,000 in the year, rent paid for 5 years in 2023. I've paid the full rent in 2023. Now let's do one more information is given. That is the first information. Second information, income each year, rupees 40,000 rupees per annum. Rupees 40,000 per annum. So what is the income each year? Every year the company is earning 40,000 rupees only. Let's assume that. So now what will happen in all the 5 years if we follow the cash basis of accounting? If we follow the cash basis of accounting. So as per the cash basis in year 2023, 2024, 2025, 2026 and year 2027, what will happen? So what is the expense we will write in this column? Just next to that, we will write the income in the next column. And in the last column, we will write the profit or loss. This is as per the cash basis of accounting. Okay, let's do it. This will be very, very crystal clear now. So now what has happened as per the cash basis, we have paid full 1,25,000 in 2023. So my expenses for 2023 would be 1,25,000. That is the only expense. 24 there is no expense, 25 there is no expense, 26 there is no expense, and 27 there is no expense. Why there is no expense? Because all the rent for all the 5 years has been paid already. What is the income in this year? Every year we are earning 40,000 rupees. Every year we are earning 40,000 rupees. So what is the profit and loss each year? In the first year, we have expenses of 1,25,000 and we have the income of 40,000. So in the first year, we are incurring a loss. What is the loss here? 1,25,000 minus 40,000. So that would be 85,000 of loss. Now next year what happened? We have a profit of expenses are 0. We have an income of 40,000. Next year we have a profit of 40,000 in all the 4 years. Do you think that if I'm as an investor looking at this business in year 2023, I will say that this business is not profitable at all. But is this the real picture? The answer is no, because if you see all the 5 years, what is the total of expenditure? It is 1,25,000. What is the total of all the income? It is 2 lakh rupees. So in actual, the business has earned 75,000 of profit. It has earned 75,000 of profit in all these 5 years. The business is actually profitable. But if I am looking only the year of 2023, I will say this business is making a loss. Is this cash basis giving a good presentation, a fair presentation, a good for decision making? The answer is no. Why it is no? Because I have expensed off full 1,25,000. That is the expense of 5 years in just 1 year only. So that is the reason we follow the accrual basis of accounting. Now let's do the accrual basis. In the accrual basis, we will just expense off only and only that amount which belongs to that particular year. So here every expense will be changed. What is the expense? What is the rent per annum? It is 25,000 rupees per annum. So here the expenses would be 25,000 every year. So what would be the profit every year? Now profit will be changed. It is 15,000 in every year. If you look at the total will not change. But now, do you think you will invest in this business? The answer is yes, because every year the company is earning some of the amount and company is consistent. Companies like Virat Kohli, he's consistently performing in every match. Okay, so that is why we will invest in this business. This is a good company. But whereas the earlier one, what happened? We have a 85,000 of loss and then we have the 40,000 rupees of profit. So I will be scared of this company because sometime it is making a good amount, a very big amount of a loss, and then it is making a profit. So I'm scared to invest in this company. So which is giving a better presentation? The accrual basis is giving me a better presentation. Am I clear, everyone? Is the point clear? Crystal clear, sir. Lovely. मजा आ गया. Okay. Now, there is one more question which I will say. Let's discuss it right now. It will take another 10 minutes, but yeah, it is what to do right now. Mr. Anil Roy, a junior lawyer, provides the following information for the year ended 31st of December 2020. So if they have mentioned the year ended 31st of December 2020, that means the company is following the calendar year because it has mentioned 31st of December. So year would have been started from 1st of January 2020 till 31st of December 2020. Okay. So fees is received in cash 60,000, salary paid 8,000, rent of office 14,000, magazine and journal 1,000, traveling and conveyance 3,000, membership fees paid 1,600, and office expenses of 10,000. What is the additional information they have given? The fees include 3,000 in respect of 2019. Means this 60,000 which we have received, this is not whole belonging to the 2020. Out of this, 3,000 is for 2019, the previous year. And fees not yet received is of 7,000. So obviously, if the fees is not received, but it will be received. So as per the accrual basis, the 7,000 is due, but not received. The 7,000 is due, but not received. Okay. Office rent includes 4,000 for previous year. So out of this, the 4,000 rent is for 2019. And rent of rupees 2,000 is not paid. 2,000 is due, but not paid. Okay. Membership fees is of 2 years. So membership fees 1,600. This is for 2 years. Now you have to compute the net income for 2020. First, on the cash basis. On the cash basis, it is very simple. Whatever is received, just consider that. Second, on the accrual basis, that is the important thing. And third, on the mixed or hybrid basis. Let's do the cash basis first. Okay. So as per the cash basis, nothing needs to be seen. Just see what is the income and what is the expense. Fees received is 60,000. So plus 60,000, this has been received. Salary paid minus 8,000. Rent for office minus magazine and general, that is expense, minus traveling and conveyance paid, minus membership fees paid, minus and other office expenses paid, minus. Everybody give me the total. That is the answer for your first part. What is the total of this? So the answer would be 22,400 rupees. That is the answer for your first part. Just do the total and everything would be sorted. So if you see down, everything has been included. The fees received and all the expenses here. So net income would be 22,400. That is the cash basis of accounting. But if I do the accrual basis, now let's do the accrual basis. So for this, every time you read the question, you need to note down where the adjustments are given. So adjustments are there in first fees. So just mark that so that we can do the adjustment. Fees, there is adjustment. Office rent has adjustment. Then we have membership fees for adjustment. That's it. We have three adjustment over here. Now we will leave extra space for these things. So I will start with fees received. That was 60,000. Okay. And I will leave some space here so that the adjustments can be done. The second thing is salary paid 8,000. Then we have rent for office 14,000. So there was adjustment in rent. I will leave some space after rent. Then we have magazine and journal 1,000 rupees. Then we have traveling and conveyance 3,000. Then we have membership fees 1,600. There is an adjustment in membership fees also. And lastly, we have office expenses 10,000. So whatever now I have written, that is just on the basis what is given in the question on the cash basis. Now we are going to do the adjustment for the accrual basis. Everybody have your 100% attention over here. Every eyes now on your screens. Okay, let's see what they have mentioned in the first line. I will rub this again and then we will read it. Okay, they have mentioned the fees. What is the fees? Here, the fees in cash, that is 20. We have received the fees of how much? 60,000. What does the accrual basis says? Whether we have to do the accounting on the basis of funds received or the when the funds should be received. The answer is when it should be received, or whenever it is due, or whenever it is accrued. So this 60,000 includes 3,000 in respect of 2029. Sorry, 2019. So in this 60,000, I would say 3,000 is from 2029. It is not the fees of 2020. So should I include that in the income of 2020? The answer is no. So what I will do, I will reduce the opening outstanding fees, because this is not of the current year, it is 2029. Why it is mentioned as opening outstanding? Because we are calculating the accrual basis income for the year 2020. So this is opening outstanding from 2019. How much is the outstanding? The 3,000 has been received. So if I say only this information was given, so how much belongs to 2020? 57,000. Okay, because 3,000 is not the 2020 income, it is the income of 2019. But there is one more information given. What information is that? There is some fees which is not yet received, but it should be received. But there are some person who has not given the fees. How much they have not given? 7,000 they have not given. But obviously that is my income. So as per the accrual basis of accounting, this should be considered in the income of the current year. So what I will do, I will plus the closing outstanding fees of the current year. This is my closing outstanding. How much is the closing outstanding? That is the 7,000 rupees. So a 7,000 rupees will be added. So what is the income for the current year? That is 60,000 minus 3 plus 7. That would be 64,000. That is the fees for 2020. I hope that is clear to all. Okay. Then we have salary paid to staff, 8,000. That is very, very simple. No changes. Then we have rent, office rent of 14,000. What is the picture over here? This 14,000 has been paid. Okay. Now this rent includes 4,000 of previous year. So if it is not the expense of the current year, it is not the expense of the current year, it is of the previous year. So what I will do, I will deduct that. That is opening outstanding rent. That will be 4,000. This is not of the current year. It is of the previous year. So if you see before also what I have done, I have reduced the opening outstanding. Here also I have reduced the opening outstanding. Whether we have the closing outstanding here? Yes, for the previous year. And rent of rupees 2,000 is not yet paid. Okay. The rent of 2,000 is not yet paid. So that is the closing outstanding. For the current year, we have not paid 2,000 rupees. So I will add the closing outstanding rent because it belongs to current year, but it is not yet paid. So it would be how much? The total here of these three items would be 12,000. This 8,000, there is no adjustment. So I will write the 8,000 directly over here. These are all expenses. So this will come in negative side. Okay. This magazine also there is no change. So 1,000 would be here. Travel and conveyance, it will be also the same. So whole in minus. Now membership fees. Membership fees, there is an adjustment. They have mentioned that membership fees is paid for 2 years. So this income, this expense 1,600, this is for 2 years. What is the income for if this is for 2 years, so I will divide it by 2. So this would be 800 per annum. So that would be closing outstanding fees. Yeah, this is for 2021. Okay, this is not outstanding. I would say this is the closing prepaid fees because this is paid in advance. This is prepaid. For which year it belongs to? It belongs to 2021. So I will reduce it because for current year my expense is just 800 rupees. 1600 for 2 years. So 1 year it would be only 800 rupees. And lastly, I have the office expenses. There is no adjustment in office expenses, so I will write down it directly. 10,000. I have considered now all the expenses as per my accrual basis. Nothing needs to be done, just the total. So that is the net income as per accrual basis of accounting. Come on, everyone, let's do the total. So it would be 29,200 rupees. Let's tally it with the answer here. See, 29,200. That is the answer as per the accrual basis. Now we have a mixed basis where it says accrue expenses. All the expenses needs to be accrued and income as per the cash basis. Income as per the cash basis. So what we have as an income, the fees was 60,000. So what will be changed? Only this will be changed. It will be considered as 60,000. No adjustment will be done because there is no accrual. Okay, so if you see, they have considered in the last, it is 60,000 only. No adjustment in that. Rest all will be on the basis of accrual. Why? Because the fees received is done on the cash basis. Rest all will be done on the accrual basis. So if you can see 60,000 is this. Now do one thing. Add all these expenses from 8,000 and deduct from 60,000 and tell me the answer. So it would be 8,000 plus 12,000, 20 plus 1 plus 3, 24, 34, 34, 800 is the total of expenses. So all expenses 34, 800 deducted from your income which is received, that is 60,000. Your answer should be 34, 800 minus 60,000. The answer should be 25, 200. Let's check it. So answer is 25, 200. Any doubt, anyone? Is it clear? So these are the three bases of accounting: the cash basis, the accrual basis, and the hybrid basis, mixed basis. Any doubts? So we have done with the illustration number 7, where we have the different basis of accounting. Okay, I hope you can do these type of questions more by yourselves. And for the practice, if you have any doubt, you are free to reach me out in any of the sessions. Okay, so that's it for today. And we have overshooted around 30 minutes in today's lecture. that may be cover up from the previous ones. Okay, so I hope this was a in-depth, detailed lecture for your upcoming classes, which will be required a lot in doing the journal entries. I have just told you the accrual concepts, but there is accounting of accrual as well that we will do in the upcoming classes. Okay, till then, see you all. Take care. Bye bye, all of you. Bye. Have a nice day.